An unidentified holder just dumped $1.3 billion worth of BlackRock spot Bitcoin ETF in a single off-exchange block trade, and Bitcoin barely flinched in response. The trade cleared through a dark pool on Tuesday, hiding both buyer and seller from public order books and from real-time price discovery. It's one of the largest single-block moves of IBD on record, dwarfing typical institutional blocks. Analysts called it large-scale institutional de-risking rather than panic selling, because a panic seller doesn't pay for dark pool execution. Bitcoin's spot price slipped 1.5% on the day before recovering most of the loss intraday. Dark pool venues exist precisely for trades this size because hitting the open book with $1.3 billion in sells would have crashed the price much harder. The unanswered question is whether this was a single whale unloading or a pension fund quietly rebalancing its crypto exposure. The next BlackRock ETF flow report should reveal which. The company that moved nearly $11 trillion in payments last year just became a regulated crypto firm in the United States. MasterCard secured a New York BIT license on Tuesday, widely considered one of the most demanding crypto licenses any state regulator issues. The license unlocks the ability to settle transactions directly in regulated stablecoins and tokenized bank deposits, not just route them. New York's BIT license is famously hard to win. Coinbase took years to get one, and several major firms have walked away from the application process entirely after starting it. MasterCard's stated reason for taking it on is straightforward. The company wants payment settlement running on blockchain rails alongside its existing traditional card network. The move puts MasterCard clearly ahead of Visa in regulated United States crypto infrastructure. Wall Street has been waiting years for a payments-grade settlement layer that meets state regulator standards, and MasterCard just built one inside the toughest jurisdiction. Wall Street's post-trade clearinghouse just chose a public blockchain for tokenized securities, and it isn't Ethereum, the chain most analysts expected. The Depository Trust and Clearing Corporation said on Tuesday that DTC custodied assets will become available on the Stellar network in the first half of 2027. DTCC processes more than $2 quadrillion in annual transaction volume across U.S. capital markets. This pick adds Stellar as a second public chain in DTCC's tokenization push, sitting alongside its existing private testbed. Stellar's native token XLM is up 8.6% on the day, the biggest move among the top 25 coins. Tokenized securities have been promised for years, but mostly as pilots. What changes now is real. If DTCC moves live assets onto Stellar in 2027, every broker, custodian, and pension touching U.S. markets will have to interact with that chain to settle trades. Subscribe now.